Welcome back to Price Action Trading Series from Market Secrets. This is episode 30 of the series, and in this episode, we are going to learn about overextension. Before we begin, I would like to mention that Price Action Trading Series is just one of our learning series. In addition to that, we have multiple learning series on algo trading using MB Broker, using PineScript. We have separate series on trading strategies, investment strategies, and taxation. So do check it out when you are free. All these contents are available in our website www.marketsecrets.in. In addition to that, we have multiple data feeds for the traders as well. So if you are an active trader, have a look at those as well, which can help you with your trading decisions. And with that note, let's jump into today's session. In the previous episodes, I've explained in detail about what are the different types of trends and what the trend consolidation is and what are the criteria that needs to be fulfilled for each of those scenarios and how a trend changes. Now we can look at the concept of overextension. As discussed in the previous episodes, we can draw two types of trend lines. An uptrend line or a downtrend line by connecting two valleys or two peaks, or in addition to this, we can draw an uptrend line or downtrend line by connecting three or more CPs. This is where overextension comes into picture. Overextension is defined as the creation of three or more consecutive CPs in the same direction. The CPs or pauses do not need to take any opposing zone out. It just needs to have a drop, pause, drop or rally, pause, rally move in the charts. A rally or drop should be formed by an ERC leg-in and leg-out candles, whereas the basing candle represents the pause in the market. We can draw more aggressive trend line by connecting the last three CPs. Overextension is great for counter trend trades. The break of aggressive trend line can also create an imbalance. So, now, why do we have an overextension? Market participants can get ahead of themselves a lot of times and fall into the trap of greed and fear. This irrationality is what makes price to look overextended on the charts. However, there comes a time where simply market participants get exhausted and the buying and selling pressure eventually subsides. This is shown as the pause or pullback on the chart. Price will eventually revert back to the mean, a state of normality. I'm sure you have been part of such an irrational move before. So, how often in your trading career have you found yourself desperately wanting to get out of the trade when you saw the price falling like a rock? I'm sure you have realized by now, while practicing the level drawings, that the peaks and valleys are frequently not there in the charts. All we have are little pauses which reveal themselves as continuation patterns, which we otherwise call as CPs. The issue now is if you do not have the peaks or valleys and thus not able to draw a trend line, how can we identify what type of trend we are in? The answer to this is to draw an aggressive trend line. The break of such trend line has the same consequence that of a regular trend line. You do not have to use them as the rules above stating the break of the two demand or supply levels already accommodate for this. So in simple terms, the break of the trend line will automatically break two or three supply zones when it comes to CPs. So by default, it will account for the other factors automatically. So now let's move on. So when are we overextended? That's the next question. So when are we overextended and when we will be able to draw an aggressive trend line? We consider overextension when we clearly see that the price have been moving in one direction non-stop by creating three or more CPs, that is nothing but your continuation patterns. So if it is creating three or more CPs clearly, then it is overextended. Likewise, visually strong up or down moves with huge candles covering a huge price distance in very short time compared to other candles. And if that had happened, we are overextended. And lastly, the price rallying indefinitely, creating a series of CPs and valleys and peaks. If this had happened, then we are in overextension. There are few important points that you need to note down here. We need to analyze each case particularly. When an overextension happens, it is recommended to keep on trading in the bigger picture's direction while applying the realignment and sequence rules. Once you get a loss on a clear level, you should stop trading in that direction until price realigns itself with a higher time frame demand level and a higher time frame supply level, or you can trade the confirmation. Confirmation trade is discussed in more detail in the later sessions, so do not concern yourself with this aspect. When 3 or 4 CPs happen in a row, overextension may start happening, and it is very likely that the price will return to the origin of the whole move to one higher time frame valley or peak, or higher time frame bullish or bearish engulfing pattern. So please keep in mind that there is no rule that will turn a CP into a valley or a peak or vice versa to make things easier for you. The structure of an imbalance can't be changed once the structure has been created. So let's take an example to discuss this. So here there are multiple CPs. If you look at here, there's a big red candle followed by a small base, another big red candle followed by a lot of basing, followed by another big red candle, followed by a lot of basing candles, followed by another big ERC candle, followed by basing, another ERC. So this is nothing but a consecutive CPs. So we have at least 3 CPs here. So we can draw an aggressive trend line by connecting all 3 CPs. So when this happens, that is when we are able to draw this trend line, we can say that the price is in overextension. So when this happens, we can keep shorting this market at these supply zones. We can short it in all these supply zones one by one until you encounter a loss. This will be an aggressive trade, so you should always use a tight stop loss with all the trades that you do with overextension and all the trades that you do using the CPs. So I hope you have understood what the overextension is and how it can be used for making the trading decisions. This brings us to the end of this episode. If you have any queries, comments about this particular episode, please leave it down in the comment section. We'll be happy to answer it. Also hit the like button if you have liked this video and share it with your friends if you find it useful. Also subscribe to our YouTube channel and click the bell icon to get notified whenever we upload a new video or conduct a live session. Thanks for watching. Have a great day. Goodbye.